Every year, thousands of plans are flagged for audit. That's true. Some for very simple mistakes. Now then, in this video, we're going to show you how to avoid an audit and what compliance areas you need to look out for. It has probably been 5 or 6 years since we have had a clean takeover, or the plan has been as easy and straightforward as promised. Why ERISA audits happen? And the first question that we're supposed to answer is, what is ERISA and who enforces it? And I had to go double check. It turns out I knew the answer. ERISA is the law of the land that defines what you can and very simply what you can and cannot do inside a qualified retirement plan. ERISA does not cover governmental plans, and there are some elements of ERISA that do not apply to owner-only plans. All right. Now then, who enforces it? The IRS is concerned with the tax implications of following or not following a plan document. The Department of Labor is concerned with how participants are being treated, and the PBGC cares about premiums and defined benefit plans. All right. So you've got 3 potential areas for people to come knocking on your door. Why does plan compliance matter?
A lot of it is just straight up risk management, right? Like you need to run your plan based on the actual rules so that you don't pay the penalties for screwing up.
Yeah, well,
there's different kinds of penalties. There's the penalties that the IRS and the Department of Labor can do, but there's also the problems with really messing with people's contributions.
That's where we go. Yeah. So you've got the culture side and the employee satisfaction side of why compliance matters. And then you've got if the IRS and Department of Labor come knocking, it's an annoyance, not a problem side of things.
If you're doing things right.
If you're doing things right, it's so much easier and so much less expensive to do things right than to have the IRS or Department of Labor say, yeah, I don't think so.
So there's both random audits where like your number came up, and then there's audits that we believe are things that have been flagged on the 5500.
There are only random audits.
No one tells you why it happens.
Nobody tells you why, right. So we have some ideas from rumor and innuendo and experience as to what causes an audit, okay? A great way to have the Department of Labor come knocking on your door is to continually be slow about paying distributions to terminated participants. Other elements that can make your life difficult are late contributions that aren't fixed, that you're showing up on the 5500, not doing the 5500 timely, okay, or incorrectly or incompletely. Discrimination testing failures, those are going to get found on audit. They may not necessarily trigger an audit, but if you've not been having the discrimination testing done correctly, and they're found out on audit, that can be expensive. 3 ways to stay compliant. 1, deposit contributions on time. The rule is as soon as possible. What does as soon as possible mean? It's basically as soon as you're required to pay your payroll tax. There's some different days out there. I'm not even going to say the number that's in the script. This is where we're conservative. If you have to pay your payroll taxes 3 business days after your pay period, that's when you need to have the money segregated from your business account and deposit it into the plan. Number 2, file your Form 5500 on time every year. Okay.
Consistency is your friend.
Oh, yeah, absolutely. For December year-end plans, the first due date is July 30th. July 31st. Extensions are possible, all right? So it's 7 months after the end of the plan year if you don't have a December year-end plan. Many small plans do not realize that they need to file. Like, oh, I only got $40,000 in the plan. I don't need anything. Nope, that's not true. If you have employees in the plan, there is no minimum account balance to have to file a 5500. If you have a true owner-only plan, it's a $250,000 threshold. Now then, Katherine, how can they make this mistake go away? What
Have
keeps
a quality TPA.
That's right. A really, really good compliance consultant will help you keep track of this.
Know and follow your plan document.
It's a really okay.
Oh yeah.
The fact that we have to put this out here, okay? Your plan document.
You put it on paper.
Playbook,
follow it.
Okay. Yeah, you have to follow it. Your plan document is your legal playbook. Okay. To find out whether or not something is right or fair, you consult your plan document, okay? Any changes like eligibility, vesting, matching formulas, etc., should be updated and followed. That's really important, not just having an updated plan document, but you need to be operating the plan in relationship to the plan document. So if you're in charge of that, make sure you understand when employees become eligible. Make sure you understand the long-term part-time employee rules, and
Or hire a qualified TPA to help you with that.
well, all of this, all of those, and make sure you understand who to call if you have a rehire and you're not sure what to do with them. And of course, the tip is hire a TPA.
Red flags that could trigger an audit, Christopher.
High employee turnover with very, very low participation. In other words, not a lot of people having an account balance.
Turn and burn.
Could be a trigger. Failure to complete your annual compliance tests, making top-heavy minimum contributions timely could hurt you. All right. Loans and hardship withdrawals done without the proper documentation. All these things they could possibly add up. Plan has exceeded the audit limit for a large plan audit. Oh, also, we should have said this at the beginning. When we're talking about audits, we are not talking about large plan audits that you have to plan for every year because you have more than 100 or 120 participants with an account balance. We're talking about random IRS and DOL audits. Sorry for not saying that earlier on, okay? So not having an audit report attached to your 5500 could increase the likelihood of an audit. Okay, you're supposed to include it. Low or missing fidelity bond coverage is one of the, supposedly one of the flags. Oh, here's a good one. We need, as a TPA, we need to put down prohibited transactions if we know there are any. That's gonna help your likelihood for an audit. Don't do them. Having a bungled provider could end up causing you some trouble. Things not filled out on the 5500 correctly or timely, or your required plan amendments being done on time. Now, please understand, all of these possible rules or reasons for an audit is simply from hearsay, rumor, and innuendo. There is no official published list. All right. If you have questions about your plan, please email us at sales@hunterbenefits.com. If you want to see how much you can save when starting a new 401k plan, please check out our tax credit calculator with a link in the description below. Let your friends know about the podcast and the videos and our LinkedIn and all that other good stuff. And of course,
Watch them all.
Watch them all multiple times. And please don't forget to keep those cards and letters coming.
Toodaloo.